Okay, hi everybody. I'm just going to chat a little bit while we wait for some more participants to come into the webinar. We've got a few more people that will be coming in. We're just a few minutes away from our 11:30 start time, and we'll just let people finish their coffee and get themselves settled and get all their communication up and running. I hope everyone's warming up this morning. It was, tell you, very chilly up here in Auckland, although we shouldn't really complain too much. Anyone from the South Island will be calling us soft. So I just know it's a bit more chillier. So if we've got days like today where it's beautiful sunshine and lovely clear skies, then even if the temperature's a little bit low, I can cope with that. So we'll just wait a few more minutes while we get everyone into the webinar. Don't panic if you suddenly decide that you do need to pop off and do something. Of course, we are recording this session and we'll be sending it out on a newsletter like we do with everything, and that way you can have another listen to it and maybe even jot down some notes or think about other questions that you might like to answer. So we'll just wait a few more minutes to get some more people in. A few familiar names there. So I can say hello to everybody there. So Warren, Richard, hi Pam, hi Jen, hey Burr, Chris, good to see you in for today's session. Thank you. All right, a few more minutes and we'll let other people come into the session. Hope everyone's keeping safe and well and COVID-free. And good news this morning, I heard on the radio that they're looking at opening up the borders completely come beginning of July, I think it was. So that's very exciting that we'll be able to get everyone from overseas in without any restrictions, I think it is. So yippee from getting everybody from overseas back here, and hopefully that means that when we come back into New Zealand from all our trips away to everywhere in the world, that when we come back to New Zealand we won't have any hassles getting back in. I think that's some of the things that does stop us heading off overseas. It's certainly, pause for thought. That can be a bit of a rigmarole to get back in the country once you leave, but hopefully that will make it a bit easier for doing that as well. So if you've got some now, let's have a look how we're going with participants. We've got a few more in there. If you've got some specific questions that come up during the session, there's a little chat function down in the middle of your screen at the bottom. If you don't see it there, just wiggle your mouse or have a quick look on your screen. There's a chat function there. And of course, I'll say this again at the end, but I'll say it now that once we've done the session, if you have any questions that come up, you can feel free to phone Ross or Simone or me at any time, or phone the office if you've got questions that pop up. So yeah, it's just any time you can phone those questions, that's fine. We've got a few more people coming in. Welcome to everybody who's just joining us now. I'm just having a bit of a chat while we wait for some more people to come into the room. Wherever you are, I hope you're staying warm this morning. Just saying before, what a beautiful day it is in Auckland. The sun is shining and it's just glorious. So I hope you are sitting somewhere nice in the sunshine. So hopefully wherever you are, you're enjoying today. A few more people coming in. We'll let that carry on through. And if you missed it, I was just saying that the borders are opening up a bit more in July. So if you're heading away on holiday, good for you. I know people who are going away to Fiji and Rarotonga and all sorts of places. We've got some clients that are in California at the moment, having a wonderful holiday on one of those beautiful silver caravans, I forget what they're called now, but I can see people will be nodding, going, you know what they are, Silver Stream, I think they're called. So if you are able to head overseas to the Northern Hemisphere, have a fabulous time. It'll be a great time to get over there. We've got a few more participants coming in, and we are at 11:31 according to my clock, so might just start with a bit of an intro. So I've waffled on for long enough now. So my name is Heather Kensley. I'm the investment manager here at Southern Cross Partners. Thank you so much for joining us today. We are going to be just doing a bit of a Q&A today. We thought it's a great time and opportunity for investors to get some questions answered, and also for us to cover off some of those frequently asked questions that come up. And Ross and Simone, who talk to new investors and existing investors all day, every day, are the best ones to actually cover off those things. So we're going to be doing a bit of a Q&A. We'll cover off those frequently asked questions, and then we're also going to cover off the questions that you have specifically sent through. So some investors have sent through some questions to be answered. I am going to caveat everything that we say here at the moment because, of course, we're not financial advisors. Everything we do say is specific to this product, and we suggest that you do seek, professional financial advice. I will also just say this, that there's a lot of information out there that you can get, a lot of commentary in the media. So it's really up to you as the investor. It's your money. You want to know where it goes and how it works. To do your research. There's lots of very good commentators out there. Tony Alexander, of course, we have Christian Leong comes onto our sessions to give you that professional perspective. So doing your own research is always a good thing. If you're particularly wanting to know about the market or real estate or whatever's important to you, I would highly recommend you, find a way to do your own research for that. So let's cover off. I'm going to just quickly ask Simone and then Ross to introduce themselves. I think I sprung that on Ross. So start with you, Simone. Just a little bit of introduction about who you are, just a couple of minutes or less, that'd be great. Over to you.
Perfect. Thank you so much, Heather. Hi, everybody. My name is Simone Vincent, and I have a background in business and in sales and real estate. I've worked for a few reputable companies here in New Zealand, and Southern Cross Partners is one of those reputable companies. I've been here for just over 3 years, and my partner and I have 2 small school-age children. So that's a little bit about me. I may have spoken to some of you on the phone, or maybe this is the first time you've seen or heard from me. So hi everybody.
Thanks, Simone. Lovely. And Ross, just a bit about yourself.
Hi everyone, I'm Ross Latham. I've been with Southern Cross Partners for a bit over 5 years now. I was previously self-employed, run our own businesses for years. Have a good understanding of property market and things. Love working at Southern Cross Partners. I think it's a great group of people and a great product that we have, and great investors that invest with us. So, thank you.
Awesome. Thanks, Ross. I will just get you to come a little bit closer to the mic. That'd be great. All right, so let's cover off a couple of the questions that we always get asked. I am going to start with you, Ross. Often we use a lot of jargon in this industry, and LVR is one of those things. We've been around, we all know what it is, but how would you explain what LVR is to an investor and the different ways that we value security?
It is something we get asked a lot, and it's really important that you know what it means. LVR means loan to value ratio. I think the simplest way to explain it is you're all aware that if you want to go and buy a house, you want to borrow the money from the bank, you have to have a 20% deposit, which means the bank is lending you 80% of the cost. That would make an 80% LVR, 80% of the value of the security is what people are borrowing. So the reason it's really important is the margin between the LVR and the total value of the property. That's what gives us our margin for a bit of security if things are getting a bit rocky. We don't go to 80%, or very rarely. You'll see if you go on the portal, most of our LVRs are much, much lower than that, and our credit team are doing lower LVRs. And the reason for that is because of the uncertainty, just to give us a little bit more surety in things. With regard to the valuations that our credit team need to be able to assess a loan, there's a number of ways we get those. There's obviously a registered valuation we can do. We also can use a recent sale and purchase agreement. If the property's just been bought recently on the open market, then that's a true indication of the market value of that property. We can also, if the LVR is lower, we can use the rating value, or we can use a real estate appraisal. And of course, we can always do a desktop valuation ourselves. We have access to different sites where we can look on and see what properties in the area that are similar are sold for recently. And of course, our credit team have been doing this for a long time. And they're very aware of what the property market is doing, and they know what properties are worth. And if we're a little unsure of it, if we're not really sure about what the value is looking like, we can always go and do a site visit. Often our directors will go and do a site visit and physically see the property, make sure it's in good condition, that the neighbours around it are all people that you want to live next door to, and then we can achieve our valuation that way. And that's how we get the LVR from the valuation as measured against what the people want to borrow against that property.
Great, thanks, Ross. So what we're saying is that we use multiple ways of valuing the property, which is really important, and the credit team do a great job of working out what we need as the valuation type to do the deal we want to do. So what would you say is, why is LVR so important? So like a high LVR or low LVR, what would be the difference between the two from an investor's point of view?
The reason it's so important is if the worst case scenario was to happen and we had to go and do a mortgagee sale to get the investors' funds back for them, which we will do if we have to. It doesn't happen very often. It's a very rare thing. But if it does, there are extra costs with legal fees and things, real estate agents' fees. And also, if the market does come back a little bit, you need to have that bit of margin. So if we were looking at a property that was valued at, say, $1 million, and we had a 60% LVR, that means we needed $600,000 out of that property to be able to pay everybody back what they were owed. It means that we can sell that property for a lot less than its market value to get a quick, easy sale and make sure we get all our investors' funds back. Probably should mention here that we have a very good track record, and that nobody that's invested through us has lost any money ever. Interest or principal has always been paid everything that they're owed. The other reason that it's important is the lower the LVR, the more equity the borrower has in that property, so the more they stand to lose if they don't meet their commitments. So the more equity they have in the property, the more inclined they are to do what they're supposed to be doing, which means we don't get to that point.
Excellent, thanks, Ross. That's brilliant. And of course, when you mentioned there, when we come to sell a property, if we have to sell it, what that means. So when we're looking at the investments that we do, of course, borrowers ask us for funds for a certain amount of time to do whatever it is they want to do with it, bridging finance, construction, things like that. So Simone, the next question I'm going to throw at you is, what about these maturity dates? So of course, we give borrowers the funds, they say we want it for 12 months. How fluid is that maturity date, and what does that mean for investors when loans extend or loans repay early?
Sure, thanks so much. Excellent question. It's a question that we get quite often with existing and also new investors. But the loan maturity date is provided on our investment listing with all of the other pertinent information that you'd require about the investment opportunity on the platform. And this is a time frame that we have agreed to with the borrower, and most times that's fine. It sits in that sort of category. But we've already looked at the deal, and the borrower has indicated that they're needing or wanting a particular term, and our terms could be 6, 12 or 24 months. And the loan maturity date is the date that we've signed off on that. And that's the date that gets popped on the portal. However, this, from our perspective and the investor's perspective, we look at it as a anticipated maturity date. And mainly that can come around by two factors. There could be early repayment. we're legally required to accept early repayment from a borrower if they choose to. If everything has fallen into line and everything goes as planned, they have the ability to repay. Then under our responsible lending code, we are legally obligated to accept an early repayment from them. I mean, I don't think anyone else would want to keep paying a loan that they're being charged interest on if they have the funds to repay it. So what that means from an investor's perspective, it means that you now have the option to actually choose another investment, or you could actually choose to have the funds repaid back to you. The other side of the coin is that the borrower may ask us for an extension. Now, we don't need to approve this. It just depends on a number of factors, but we do have a team that look after this area. And this team would have contacted the borrower or the associated broker several weeks out from the maturity date, the anticipated maturity date. So they give us an idea of where they're at and how they're tracking, and we'd like to know that just before that sort of happens. But, we have a great relationship, a fantastic relationship with our investors, and we also equally would like to have a great relationship with our borrowers as well. So we assess the reason that they require this extension, and currently there's been a huge number of consents that are being pushed through the councils. So we're on record numbers now looking at consents being taken by Auckland City Council especially. There was about 18,224 consents that went through, and being in May this year, we're probably up 2% compared to the same time last year. So that doesn't mean that the borrower is a bad payer. It doesn't mean that there's anything wrong with the deal. It just means that reasonably they require more time to pay it. Now, in that instance, as long as everything is okay and we've reassessed that, then we would approve it. So what that means again for you as the investor, it means that you don't need to bother to do anything right now. You can just sit back and keep earning those returns until the investment has repaid.
Excellent, thanks, Simone. So the maturity date can repay early, or it can extend on for very good reasons. So Ross, do you want to make a comment that you probably will get from investors about, well, what happens if the loan renews, but I need my funds back for something? So what's the options available to investors in that situation?
Well, that's no problem. If the loan extends and you didn't want to extend with it because we've made the decision, not you, it's no problem at all. You just get in touch with us and we simply relist the investor's investment on the portal, and we manage that and we get it on sold for them. You do have to wait, of course, until another investor takes it over. At the moment, that sort of takes between 1 and 2 weeks. It can take a bit longer if things are, for instance, during the first lockdown last year, there were a few people wanting to go and sell their investments. People were a bit reluctant because there was so much uncertainty in the air. And it was taking longer, but eventually they all did sell. There's no cost to do that, of course. We've changed the rules, we've moved the goalposts, so that's on us. You can also use that secondary market. As Simone was saying, when you invest for the life of the loan, and it may be a 12-month term, and 6 months down the track, you might want your money out to buy a new car or take advantage of the borders that Heather's talking about opening up, and you might want to shoot off on an overseas trip. It's no problem again. You just let us know and we will list it and sell it. If you've instigated the on-selling, you would pay a small fee of $175. That's the only fee that you pay as an investor. And that covers the cost of us listing it, managing it, and getting it on sold for you. Unlike the banks, where if you break a term deposit, most of them have a mandatory wait period of between 30 and 90 days where you just don't get your money. And they also very often penalise you on the interest that you would be earning. We don't do any of that. You get full interest calculated daily up until the time somebody takes it over, and everything is then paid back to you then. But you do have to wait until we can get it on sold. And if you need the money in a hurry, there's lots of things that we can do. Heather's really good at, she can step in and manipulate things and maybe alter the amounts of the investment, whatever. But certainly we will do everything in our power to get it sold for you as quickly as we can. And like I said, it normally doesn't take long at all. They sell very, very quickly. We have a lot of registered investors, most of whom are looking to reinvest when loans repay. You will have seen by being on the portal, you can see how often things roll over and move on. So it's never been a problem yet. Don't ever be afraid. If some people get a bit nervous when loans extend, it's nothing to be frightened of. It doesn't mean that the borrower is in trouble or anything like that. If they're in trouble, we're not extending their loan. So it's just a simple fact, like Simone was saying, that with council delays and building delays and everything else, it's just a fact of life at the moment. That's what we're dealing with. But we do have that secondary market option for you if you want to on-sell.
Excellent, Ross. So what you're saying is that we're flexible and I can manipulate. I'm manipulative. No, that's not me. What we're trying to get across is that we are flexible, and if you do have a circumstance where there is an absolute emergency, please get in touch with us. But yeah, as Ross says, we try and make it easy for you, but you do invest for the life of the loan. When the loan repays, your funds repay. If the loan doesn't repay, we don't have technically any funds there to repay you. We just want to sell it to another investor. That's quite a lot of information to take on about maturity dates and secondary market. So I would encourage you to go onto the website and have a look at a tab which is headed up very aptly, how do I get my money back? And there's lots of information there about that. And again, if you've got questions, you can give Simone and Ross a call and they can cover that off as well. Talking about the website and doing orders, and Simone mentioned earlier about looking at the maturity date on the listing. We often get asked, so can you help me with my first order? Can you advise me on which investment I should be looking at? And Simone, I'm going to throw this question to you. What do you say to someone who says, can you help me on the website, and can you help me choose?
Absolutely. So we're happy to talk to people over the phone. We can guide you through your first investment if this is your first investment. We send out videos so that you've got it on hand and you can have a look at it there to guide you through that first investment. It's not too hard at all to do that. What we can't do is we can't give you any financial advice, and we can't give you what is the best investment that's on the platform at the time. So we can't tell you which investment to go into. It's a really personal decision for someone. As Ross is mentioning about the LVR, that's a factor that may be very, very important to one investor, or it could be that the rate of return is really important to someone else. Locations matter to a lot of investors, whereas the particular project and how they're going to repay is very pertinent to another investor. So we can't tell you which is the right one for you. That's up to you to decide. But certainly we can take you through how to place your order, and we can guide you on information about the actual investment itself. We just can't do the choosing for you. That's what you get to do as an investor. We do have an option if you're local here. If you're in Auckland, you can come into the office here and visit us in our office in Howick, and we can help you on our big screen, take you through an investment, or we can take you through setting up your laptop and actually just assisting you in that sort of terms here. Otherwise, we can do a phone call, or we could do a video call and actually help you through the system itself. So certainly a lot of help. Ross and I are both available to talk to anyone and take them through their first one or their.
Awesome, thanks, Simone. Yeah, the first one or many others after that. And sometimes it does take a while for you to get your head around how we actually do things. One of the questions I just want to cover off very quickly that we had from investors was, can we give you more time on the website when you're placing that order? If you are finding that you are timing out when you're placing that order, please give Ross or Simone a call. They can take you through it. They can take you through some tips on how to make that a little bit quicker. We do give you 2 minutes, but it's good to have some preparation set up for yourself before you go through and do that, and know what you're looking for, know what you're going to put in. So I think that question came from, I can quick look here, Jeff. So from Jeffrey, if you're online, please give Ross or Simone a call when you're going to place an order, and they can help you through making that a little bit quicker for you. Simone, you talked about when we're looking at the investment. So what secures? We get a question, you know, how secure is my investment, number one, and it's usually followed by the 4-letter word which we don't use, called safe. How safe is my investment? How secure is my investment? So what is securing people's money?
Fantastic question, and that's probably the one of the most asked questions that we have. What is the security? How is it secured? And is it safe? As an investor, I think we all have to accept that investments have elements of risk in them. There are certain elements of risk in any sort of investment, whether it is a term deposit and the constraints that are around a term deposit, or whether it's shares on the share market, etc. There are elements of risk. There are also elements of convenience and inconvenience associated with each investment. So in terms of Southern Cross Partners, we have a first mortgage, and you will see that listed on the portal. There'll be a first mortgage writing just below the investment opportunity, and that indicates that we do have a first mortgage over a property. So we're not listed on third or fourth down the track to be repaid should anything unfortunate happen. We are listed with our team of lawyers. We've been able to be put on as a first mortgage. So that really means and translates to you as the investor is that we do have something tangible there. If the unforeseeable should happen, if something does happen and we need to get the funds back, and we have gone through the proper protocols and processes of trying to sort it out in-house here as we manage the loan for you, we may then take it to a mortgagee sale. That is backed by that first mortgage over the property. So there is actually quite, my mum said the other day, peace of mind, she called it, peace of mind that there was something tangible that would hold up if something did actually happen to that loan. So we've got that first mortgage over the property.
I think that's why some of our investors really like to come to us, because we have that bricks and mortar approach. You know, you're not just giving funds to a company in like a debenture to say you do with it what you want to do with it. We're saying, look, here's a list of properties. Your money goes into that particular property, and we hold a register, of course, that shows all the investors that invest in a specific loan, and that register can be requested by the FMA, the Financial Markets Authority, at any time, at any day, to see exactly where all the investors' funds are. So that's how we link everything. So we've got some questions that have come through that I want to cover off with some of our investors that sent questions through. I was looking at the questions and they really went into some very specific or specific areas. One was the market. One was rates, and then the type of loans that we do, and of course the current portal. So I'm going to cover off rates at the moment. I don't have a crystal ball, and it's really interesting whenever someone used to say, oh, what's rates going to do, Heather? And if you'd asked us that question in February 2020, we would have had a completely different answer to the 1st of April 2020, because you just don't know what's going to happen. Interest rates, I think, are going to be slightly on the rise. Of course, our market is completely different. What we do and what we lend to and who we lend to is different to the banks. We're not governed by the OCR or the Reserve Bank. It's really what we can buy this loan for. So we've got a team of BDMs that go out and have great relationships with mortgage advisors, and they say to the mortgage advisor, hey, look, we've got some great product here. We've got lots of money with investors wanting to invest. What have you got for us? What can we lend on? And we may be competing to get that good loan with another company that's similar to us. So if it's a good loan, we may go slightly lower in the interest rate, because of course a borrower wants to pay a lower interest rate to get that good loan. Our motto has always been quality, let me get this right, quality over quantity. So sometimes you'll see the investments on the website ebb and flow in the number of them, because we cherry pick a lot. We get so many phone calls. Our BDMs that work with the brokers get so many phone calls, and they would turn away, I'd probably say, I don't know, 80% of what they get. And we really only want the good deals. So it means we have to compete for those deals. So sometimes the rates may be slightly lower. When it talks about risk, we will price for risk. Risk to us is the location, the type of property, the loan to value ratio that Ross spoke about, what they want to do with that property. So if it's a low loan to value ratio, I'm talking 50% or less in a main centre, it's a standard residential property, there's no construction for it, then that rate might be slightly lower because the perceived risk is slightly lower. If it's in an outer area and it's a construction and it's a higher LVR, then of course we're going to price that for risk. So you'll see on our listings that the lower LVR and the standard residential might be a slightly lower interest rate to you, and then the ones that have a slightly more perceived risk of construction at the moment might be slightly higher. We are going to be talking a bit more about rates as we go on in the next month or two, and I'll make sure that we cover that off in our next newsletter about where we see rates going and how that affects us. So I'm sure there'll be someone online that will make a little note for me that says, let's talk about rates. And that leads me into construction. Talk about construction. We've got a really good question here from Alistair that says, does the present climate on building materials affect the sale of properties? And also another one about construction here as well. And we really have changed the way we're doing construction at the moment. We are only looking at previous borrowers with a good track record. We're looking at reputable builders that we've been in business with before. Those we're putting in lots of contingencies. So by contingency, and you'll see that on the listing for some of our construction loans, is that the total loan amount that we have on there is everything that they have to pay us back, but included in that is the build cost, plus a percentage on top of that build cost to cover off any contingencies. And that could be a rise in building materials, delays in council, anything like that. We always put a contingency on top of the money they've asked for to do the construction. And that's in there at the well at the moment. A lot of our builders already have stock on hand. We're doing a construction one, I think it might be on the website at the moment, where we've used a builder before. They do a very good product and they've already got all the materials they need on hand because they've got great relationships with their suppliers. So those are the type of borrowers and builders that we want to be dealing with, and that's why we have changed the way we are actually doing our deals, particularly with construction. So we will make changes to our policy, I suppose, and ebb and flow as the economy and as other things are coming about. So we don't just have a line in the sand and that's it. You do have to be flexible and be aware of what's happening around. Let me have a look. What else do I need to cover off? Concerns regarding repayments from borrowers as the housing market tightens. That's a good question, because if you would go onto our default page on the website and you look at the loans that are in arrears, I don't even think we've got one or had one for quite a long time. So the nature of our borrowers are business people. They're buying investment properties. They're doing small developments. These are not what we, mum and dad borrowers that might lose their job and have a whole lot of hire purchases that they can't then fulfill all their commitments. So the nature of borrowers is not those people. We have got business people that we make sure have X amount of funds available to them or income coming in to cover the loan. So one of the things that we look at when we're assessing the loan is, Ross and Simone were saying, we look at the security, Ross said the security, obviously that's what's holding the mortgage, but we also look at, can these people afford the loan? That's kind of 101 finance. Why would you lend money to someone if they can't afford it? So we still look at that very closely, and that is why our arrears over the last few years has been minimal to zero, but there's a graph on the website you can have a look at. The market is something that does ebb and flow. As I said at the beginning of this session, it's really important, we believe, that you as the investor do your research. The reason why Southern Cross Partners was brought about, Barry and Julia were lending their own funds. They had friends that wanted to invest. And when we started doing the sort of shared loans or contributory mortgage loans, peer-to-peer loans, we realised that people need to do their own research. If you were around in the GFC when all the finance companies were falling over like dominoes, everybody heard of the names that we can't remember now, Elders, the B word, Bridgecourt, and people like that they were just falling over all the time and people put their money into one type of investment. From that, we believe that we needed to put the decision making in the investor's hands. You make the decision. Here's all the information that we've got. We'll present it to you. You decide. And, we'll try and give you as much market commentary as we can that affects us that we know about. But, we're not advisors. We will try and, put professionals in front of you to be able to give you that. But we do encourage you to do your own research and look at the commentary and look at who is writing the article. There's full of stuff, and the Herald are full of articles from people with sensational headlines. But who's writing that? Are they a real estate? Are they a finance person? So do have a look at your research. That's a little bit of a rant from me about research, but it's really important that you know what's happening with your money. So I think that we've covered off quite a few questions. There was, I know Chris had some questions about rates. I'm just going to have a quick look at any other questions that we've got have come through. But as I said, that if anyone has got a question that they really want to talk through in more detail, then please call Simone, call Ross, call the office. We can put you through to them. Call myself. You can even call our managing partner, Cam Harper, if you want to know a lot more about construction and loans and credit policy. I definitely recommend that Cam's the person to talk to about that. But yeah, please, if you want to talk in more detail, just give us a call, drop us an email. You can send it to investments@scpartners.co.nz. There's one other question which I've just noticed that we had about when investments renew. So we talked about that. Simone talked about loans renewing, things like that. We are re-looking at those loans that renew to see if there is an increase in the interest rate is applicable at the time. If it's probably a 12-month extension, then we will be looking at whether the interest rate is applicable for now. If it's a 1 or 2 or maybe 3 months at the most, probably 2 months, then upping someone's rate because they just need to get their code of compliance done is probably not something that we will be doing for just like a very short term, 1 month or 2 months. But every loan is different and every loan is assessed differently. So while you may expect to get a higher interest rate and you're not sure why you're not, please call and we can have a chat about that. Okay, so to say we're very accessible and flexible, and we're here to help really. So I'm 5 minutes over. It wasn't too bad, I didn't think, for that. So again, ring Ross or Simone to discuss in more detail. We will send this out as a recording so you can listen to it again in more detail. And yeah, I hope everyone has a fantastic day and you're out enjoying all this sunshine. And Ross and Simone, if you want to say, see you later.
Thank you very much. It was great. Yeah. And please give us a ring anytime. Happy to have a chat. Like to have a chat. Look forward to it.
Great. Thanks, Ross.
Yeah, thank you. A big thanks from myself, and look forward to hearing from you or hearing an email from you. Welcome at any time. And thanks, Heather, for hosting me. Thanks, guys.
No worries. Thanks, everyone. And if I haven't answered your question, please drop me an email and we can go in more detail. Lovely. Have a great day.
Thank you. Bye-bye.